What's going on, guys? In this video we are going to look how you can easily make $100 plus a day trading crypto. That includes Bitcoin, trading altcoins as well. In this video there's going to be chapters in the timeline below, so feel free to skip ahead, rewatch something, easily navigate throughout the video. All I ask, guys, is that you do smash a like button. So a quick summary of what's included in this video. It's based on what I've learned over the years, how I'm now making way more than $100 a day, but $100 a day plus is a great way to start. So we're going to be talking about the platforms, the applications that you need to get started. We're going to be talking about different strategies that you can use for trading crypto. We're then going to be talking about trend lines, support and resistance. Technical analysis, of course, is the backbone of making money in trading. We're then going to talk about trade patterns, what to look out for, when to go long, when to go short. By the way, that means buy or sell if you didn't know. Then we're going to be looking at different indicators that you can use. We're going to be looking at risk to reward ratio and money management, probably the most important underrated thing in trading. We're then going to be looking at putting on the trade, so order types. We're going to be talking about leverage, stop losses, take profits, and there's a little bonus extra thing, how to make money trading crypto as well at the end. So guys, let's get straight into this one without any further delay. Let's get started. So in order to get started making money from trading crypto, you do need some applications or just some free tools at your disposal to help you trade and help you analyze the market. First thing I would say is really important for any trader is CoinMarketCap. This is a completely free website. It tells you what coins are trending. You can filter it by what coins have moved the most in the last 1 hour, 24 hours, 7 hours. It's also a great place for finding altcoins as well, as you can search by the market cap, see which cryptos are doing well at the moment, which are not, which are in favor, and all round just a really good source of information for trading. The next thing I would say is super important is TradingView. Now, TradingView is the place where you're going to be doing all your charting, your technical analysis, working out if something is looking likely to go up or down. Technical analysis is going to be 80 to 90% of your trading, so it makes sense to have a good trading platform, and TradingView is by far the best. You can start TradingView entirely for free. I was using the free version for many months before I decided to upgrade to, I think now I'm premium, but it's just as good on free for beginner users, so no cost there to get started either. Now, of course, the next application you need, arguably the most important one, is a reliable, trustworthy crypto trading platform. My recommendation is Bybit. I've been trading with them for 3 years. Great for trading Bitcoin, Ethereum, great for trading altcoins. There's a whole host of different features. They've got great customer service. And the great news of all, guys, I am an affiliated partner, which means I can pass you on up to $30,000 in bonuses when you sign up, plus a free trade, plus 0 fees for a whole month. So when you click on this link here, it's going to direct you to this page, and you can see you'll get these exclusive bonuses when you sign up with my link down below. If you prefer to look at another crypto trading platform, I do also recommend OKX, another great crypto trading exchange. If you click this link here, there's up to $10,000 in a mystery box. For any tutorials for further trading on these specific platforms, which include other features as well, do check out this link down below for all my crypto trading tutorials. So before we get started actually trading on our crypto trading exchange, of course, we need to talk about analysis, devising a strategy, because without a strategy, without a plan, you're doomed to fail, and making any money per day or week trading cryptocurrency is going to be a tall order. So the first thing we need to understand as traders, very simply, is what kind of trader we're going to be. Do we want to be a scalp trader? Scalp traders is someone that usually trades the smaller time frames. This could be the 5, 10, 15-minute chart. Do we want to be day traders trading the 1 hour chart, maybe up to the 4 hour chart? Or are we going to be long-term position traders using the daily chart, the weekly chart? All are absolutely fine, and choosing one of these to suit the lifestyle that you have and want is of course key. And if we know what time frame we're trading in, everything else becomes much more apparent. What take profit levels we should have, what stop loss levels we should have, and it's better for managing our risk. And of course, there's no reason why you can't have a mix of both, and you could have a long-term strategy and a short-term strategy. I do recommend maybe an additional trading account for that, just to keep things very simple and easy to manage. So first up, support and resistance, arguably the most important thing when it comes down to trading, to spotting a range. Now, just by using the naked eye here, we can see on this example chart, this is the 8-hour Bitcoin USD chart, we can clearly see that there is resistance going through at this level. See how the candle bodies meet this resistance line. Nothing had broken through at this point, and this price point here as an example is 28,700. We got these wicks through, they're known as wicks, but we weren't able to break out of this until this point here. The same is to be said about the support. We can see with the naked eye, there is a support level here, approximately speaking, at 26,900. We can straighten it up here, and we can see that no candle body closed outside of this zone. So we know we have support in this example at 26,900. We have resistance at 28,700, and this would have presented a great opportunity to buy here or short here. And when you break out of a pattern, that is a great time to enter a position. That's when I would be going on to someone like Bybit, opening up a trade, but more on that a bit later. Now, this is of course a basic support and resistance level. Not everything is always as simple in a simple parallel like this. Occasionally, you may have a triangle, and these are also known as consolidations. If you have a triangulation like this where you have support and resistance, typically the target out of this will be the measurement of the triangle. So what you do in this case, you use this tool here, and you basically want to measure from the top to the bottom. So the very start, the bottom of the pattern to the top of the pattern. Use this extension, simply drag it to the bottom here, and 9 times out of 10, in my experience, that will be the target. And you can see in this case, we hit target perfectly. So you could have entered at this point, which would have been the place to trade when you see the volume coming in, you see the breakout. And in this example, you could have made a lovely gain. Without leverage, it's 7.3%. If you used, for example, a 10x leverage here, that's a 73% gain. But again, more about leverage and risk to reward a bit later. So that brings us to trading patterns. Where you have support and resistance, you also have patterns within this that indicate that something's going to happen, i.e. the price go up or go down. When you're looking at a chart, it's simply indicating human psychology of buyers and sellers, essentially greed and fear, or fear and greed. Now, in this example, I'll show you one of my favorite patterns, or the most familiar patterns I use. And this is an inverted head and shoulders pattern. This is a bullish pattern. So with an inverted head and shoulders pattern, you have a neckline, which you can see here in the same example, we had the resistance. You can also see that we have a shoulder, a head, and another shoulder. Now, 7-8 times out of 10, you're going to get a break to the upside when you see a pattern like this. And the target is the depth of the inverse head and shoulders pattern from the breakout point, and typically you're going to reach all the way to the target. In this example, we didn't quite meet that target, but we did have a huge breakout from this resistance in terms of percentages here of 6.4%. So still a very, very nice trade. So moving on to another familiar pattern that I use every day in my trading. This is known as a wedge, and you can see it a bit more clearly on these cheat sheets. Generally speaking, if you have a downward falling wedge, that's bullish. If you have an upward falling wedge, that's typically bearish. I'm going to put a link to this Forex chart pattern cheat sheet, but just because it's Forex, it works just the same for cryptocurrency. In this example here, you can see using the width from the top to the bottom and from the breakout point here, you almost get a perfect target point. So if you would have opened a trade on the breakout here in Bitcoin, you would have made about 7.2% without using leverage. So again, great gains to be made here from trading out of a shape. Now, I showed you some bullish patterns, but there are bearish ones as well, as you can see in this cheat sheet. Like I said, link is down below for this, so you can study it in your own time. So now we've learned a bit more about support, resistance, patterns to trade. What we then need to look at is indicators. Now, indicators are a great tool to use in addition to our support and resistance and chart patterns in order to give us confluence. Confluence is where it gives us confirmation if something's a good trade or not. So for example, you could be looking at a trade pattern, look for the breakout, and an indicator could be a filter for that to make sure it is actually a good opportunity to get in a trade. So I'm going to show you the most popular indicators and the ones that I use. There are hundreds of indicators, and that's why trading is amazing, because it's so much beyond the basics that you can learn to become a better and better trader. But if you understand the basics correctly, you can beat 90% of traders. So first up, let's look at the MA ribbon. This is also known as a moving average. So I'm going to toggle that on here, and this will change depending on the time frame that you're looking at. So in this example, we're on the 8-hour chart, and we can see that we're above all the moving averages. However, if you were to go into the small time frame, we can see Bitcoin has started to come down in price here. It's likely we're going to be below the moving average. So if I go right into the 30-minute chart here, you can see that we're making our way into the moving average ribbon. The different colors represent different periods of time. So in this example, we're using the 20-day, the 50-day, the 100, and the 200-day, which is the most popular, which is what most traders use. If you go right down into the 5-minute chart, for example, you can see we are under the moving average. If you're below the moving average, it's a better idea to accept the trend as your friend to the end and short. If you were above it, like in the case of the bigger time frame, we're more bullish. You can see we're above the moving average, and this could also act as a great support zone for picking up more buy orders. But again, more on the orders and risk to reward ratio later. But in summary, moving average is a great way and a great indicator to see if we are bullish or bearish. So the next indicator I want to show you is RSI, the Relative Strength Index. This tells you and shows you how overbought something is on a time frame, or how underbought it is. Now, in the case of the 8-hour chart for Bitcoin here, you can see that we are pretty much overbought on this time frame. We're above the average, and on a Relative Strength Index indicator chart, you are going to have between 30 and 70. It can go lower and higher, but this is generally the range that it will stay in, particularly on the bigger time frames. Now, if something is above 70, this gives confluence of more of a shorting opportunity. If it's above 30, generally it means more of a long opportunity. Again, it's all dependent on the time frame. So for example, if I was to go into the 5-minute chart here, you can see that we're not overbought, we're actually underbought, and we're just breaking above this moving average here on the RSI. So potentially a good long opportunity if you're trading the smaller time frames. Time frames are very, very important, and the Relative Strength Index is a great indicator whether something is of good value to buy or indeed sell. So now we move on to one of the more professional indicators, but yet not too difficult to use. It's the Moving Average Convergence Divergence, better known as the MACD. The MACD shows us simply if the opportunity there is a bullish one or a bearish one. On the 8-hour, you can see we're flipping green, which is bullish. When it flips red, that is the time to turn bearish and short. So if you look on the smaller time frame, for example, the 10 minutes, you can see that we're actually entering a bearish cycle, potentially, but then maybe going into a more neutral. The darker the color, the more bullish or bearish it is. So in the example here, more bullish, lighter green, slightly bullish, but not as bullish. Darker red means very bearish. Lighter red means a little bit bearish. So for another example on the hour chart here, you can see that we were very bearish over the last period of trading. This chart here going back several hours, and you can see that it's now becoming less bearish, but watch out for the darker red one because it may be giving us a warning. Actually, not the time to go long just yet. Let's wait for the green MACD candle. Lastly, on the indicators, I'm going to up the notch on the professionalism a little bit. This is known as the Fibonacci retracement. Now, the fib levels give us a strong indication of where price should come to, whether it be to the upside or the downside. So I'm going to show you again, this is time frame dependent. This is the 1 hour chart. What you want to look for is a low on a chart and a high. So you can see that there's a low here at 28,200 and there's a high here at 30,574. Using a fib level, Fibonacci retracement, we can see where the price is likely to fall to in support. So we drag from the low to the high and we can see we have a golden pocket here, the golden ratio also known as, and we can see that between $28,993 and $29,095 is the likely support level. Now, there are other levels to make note of when trading the fib levels, and they are as follows. So the golden pocket is always 0.618. Then you have the 0.38T, and you can see how we've actually just hit that, and price action typically responds to these levels. The next level is the 0.5, and then below the golden pocket, you may get supported at the 0.786. Let's look at this as another example on a bigger time frame, and I'm also going to show you how to look at it for bullish targets as well. So what we can use here on the daily chart, let's look at a bullish target first of all by going long term. In fact, let's go right into the weekly to show you the top of the Bitcoin bull market. If you used a Fibonacci retracement from the high to the low on this big time frame, it's actually going to give you some levels, some price targets. So the first level on the long term here, the 0.302, is actually $35,884. The way I did that is drag from the top to the bottom. The golden pocket is $48,400 to $50,650. Similar, if I wanted to see a bearish target on the more long term, we could go from the previous low to the current high, and we could see there are some potential bearish targets to the downside, and you can see the relevant levels that you need. Fibonacci retracement is an excellent tool, but it shouldn't be used alone, and I must say it is a little bit more intermediate. If you want to learn more about Fibonacci retracement levels, do make sure you'll subscribe to the channel because I use them a lot in my daily TA. So this brings us on to probably the most important part of the video, and if you're still watching to this point, well done. You obviously are serious about making money in trading crypto. Now, this is the risk to reward ratio. Risk to reward is super important to know if you're getting good value from a trade. So in the previous example, we could have used this triangle, for example. And the risk to reward is basically telling us if we're going to enter a trade due to our analysis that we've done, are we getting good value? So if you use this indicator over here, we have a long position and a short position. In the case of this pattern, it's a long. So if we wanted to trade the breakout here, but obviously these breakouts don't always happen. They do happen about 70-80% of the time, but they don't always happen. So you need a stop loss. Using a stop loss is super important, and later in the video, I will be showing you how to put a stop loss on over on Bybit. Once again, guys, link is in the description for Bybit down below, and excellent bonuses plus 0 fees for a month. So if you use that link, you'll get those great benefits. But in this example, let me show you about the risk to reward. So from the entry point where you want to enter a trade to the target, and we knew that our target is somewhere in that region of where the price action went to. So what we want to do is do our risk to reward, and bear in mind this is before it's happened, so we don't know exactly. So we're measuring to the breakout, but we want to have our stop loss under the support of this triangle, of this resistance. So if we have our stop loss in this example at $27,750, and I'll take profit up at $30,565, we know using this tool that we have a 3.22 risk to reward ratio, which is excellent. And we know that there's a 7.5% upside and just a 2.3 4% upside. So if we used a 10x leverage trade here, the potential gain is 75%, the potential loss is 23.4%. So an overall good trade. This trade isn't guaranteed to happen before of hindsight, obviously, but the great thing is we know that this chart and this pattern breaks to the upside more often than not. So we know that even if this won 1 out of 3 times, we're going to be in profit as long-term trading. Trading is all about correct money and risk management. This is a risk to rewarding trade. If you want to risk your money correctly as well, you should only be using a small percentage of your overall trade portfolio per trade. So for example, if you have $1,000 in your account, I don't recommend using any more than 5% exposure per trade. And we'll be working out later in this video how you work out what you should be using as margin, so you're not losing more than what your your risk level is per trade. So now we move on to the fun bit. We've done all our hard work doing the technicals. We've checked out the charts. We've done our charting and we're convinced of a trade. Amazing. Then, of course, you can go over to Bybit. Like I said before, link in the video description down below to get these great bonuses on Bybit. Sign up literally takes 20 seconds, super easy. When you make a deposit and make your first trade, you could start claiming these bonuses. So on Bybit, the first thing we're going to look at here is simply putting on a trade. Now, Bybit has different trade types, different options. I won't spend too much about the different features of Bybit in this video because I have many tutorials using this link down below. You can check them all out, like a full-featured Bybit crypto trading tutorial, how to trade with leverage responsibly, how to do copy trading, and much, much more. But in this video, we're going to continue with how to trade Bitcoin in 2023 responsibly and profitably so you can make easily $100 a day. So let's check this out. So in order to make $100 a day trading crypto, unless you have tens, maybe even hundreds of thousands to play with, the only 2 real ways of doing this is by using derivatives, futures trading, or copy trading. There's going to be a section at the end of this video about copy trading. The alternative, of course, to futures, derivatives, is simply by using spot trading. And spot trading is basically using no leverage at all and simply buying on the spot, buying and selling at a profit. The benefit of using derivatives is you can use leverage and you can also short, so you can bet on the market going down. Trading derivatives futures does carry more risk, I will make that clear. However, when done responsibly using correct risk money management, which I'm going to show you in this video, there is great opportunities to make profit trading, but of course risk as well. So let's look further. So here we have the order types. We have limit order, we have market order, and conditional order. And we also have the leverage. Now there's 2 different options when it comes down to leverage. You have cross and you have isolated. As a beginner, I strongly recommend to select isolated because it will isolate that particular trade and balance from your whole crypto trading portfolio on Bybit. You can much better manage the risk. And if you lose that particular trade, it's not going to have any risk of affecting the rest of your balance. Cross can come in handy for more experienced traders, but to get started, I would simply select isolated. Then it comes down to selecting your leverage. Bybit allows you to trade up to 100x leverage. I wouldn't necessarily advise 100x because that is extremely risky, and your liquidation price is going to be much nearer to your entry price. But of course, as you get into trading and learn more about the money risk management side of it, you can decide what leverage to utilize in your trading. A sensible place to start is really anywhere from 5x up to sort of 20x on Bitcoin. For more volatile coins like Ethereum or altcoins, I wouldn't really go over 10x leverage. Again, it's down to the individual's risk tolerance. And of course, make sure you do your due diligence on the money risk management side, because leverage can be an amazing tool, could be your best friend or your worst enemy. So treat it with responsibility. So then it comes to putting a trade on. And of course, you have the option to either buy or sell. That's the beauty of trading futures, derivatives, contracts over on Bybit. Now, the options you have are limit, market, and conditional. Limit order allows you to set the price that you wish to enter a trade at, whether it's long or short. The benefit of doing that is the fees are generally a little bit lower, and it also gives you more control of the price that you enter at. The downside to it is your orders don't always get filled. Your limit order will go into this order book, and it may or may not get filled. The benefit of using a market order is you may not get the exact price you want, but you'll get into the trade and market very, very quickly. The cons to market is the fees are bigger than limit orders. But like I said, using the link in the video description down below, you will get a discount on fees and a huge bonus as well. A conditional order, a little bit more advanced, but another great feature. You may use a conditional order when you're not sure if the price is going to go up or down. In this example, you could have set a conditional order here to buy and a conditional order here to sell. And if it breaks to the upside, your conditional order will be automatic to the upside, or it could be an automatic short order to the downside. So conditional orders can also be really handy. So let's say you wanted to put a long order on as a market order at Bitcoin at the time, and let's say you wanted to use 25% of your balance. Now I'm using an account with no balance in at the moment, so it's not going to show you exact numbers, but just as an example to show you how to use a stop loss and a take profit. So let's say you wanted to buy it with a take profit and stop loss, you can simply select that. If you were going to sell short and set a take profit and stop loss, you can set it as that. Once you've entered your stop loss and take profit either as a percentage or as the actual price, it gives you both options. You can then go sell short or buy long, and you can simply set it and forget it. Simple. For a more in-depth tutorial on order types and how to trade more effectively, do check out the link in the video description down below for tutorials. It will bring you to this page, and you can see I have many tutorials how to make money trading crypto on Bybit. Copy trading, for example, a comparison of fees, how to trade with leverage responsibly. I have an OKX trading tutorial as well as another copper trading video about the best settings to use. And that brings me on to the last step of the video, how to make over $100 a day trading crypto, is of course copy trading. Now, copy trading is for those of you that may not be as familiar traders. Maybe you're still learning trading yourself, and you want to leave it to the professionals, the vetted professionals over on Bybit. And that's exactly what you can do. You can copy master traders. You can filter them by the highest ROI. You can go view more, and you can even filter people by the best 7 days profit, the best win rate, the best stability index, and many other things. Once again, tutorials on the channel in more detail how to use the copy trading feature. I myself too am a master trader on Bybit. I go under Mars Trade. There is a link down below if you wish to follow and copy my trading as well. Let's summarize, guys. In order to make $100 a day trading crypto, the most important things are the right platforms. Bybit, link in the video description below for a huge bonus. Get CoinMarketCap up on your browser. Super important to see what's going on in the markets. Then, of course, TradingView, so you can chart effectively, see what's going on. Devising a strategy, getting the right time frame. Are you going to trade the smaller 10-minute charts here, or are you going to trade 1 hour, 4 hour, the daily chart? Whatever's best for you to suit your lifestyle, really. Then you're going to go back to trading patterns, indicators, look at risk to reward ratios. Then you're going to go over to Bybit, putting on the trade, looking at the right order types, the right leverage to use, using a stop loss. And then, of course, there's copy trading as well. Once again, the chapters are down below. Feel free to rewatch something if you enjoyed it. Do smash up the like button, and don't forget, guys, all the links are down below for your trading bonuses. You'll get a bonus, and you'll be able to trade with 0 fees on Bybit for a whole month. OKX as well, great crypto trading platform. Join our Telegram Signals group. Make sure you'll subscribe for future videos as well, where I talk about daily technical analysis, and feel free to check out any one of these videos on screen before you go. Thanks for joining me, guys. See you on another video very soon, and good luck trading.